Hello and welcome to another episode of the Eunice Ajim Show. I am your host, Eunice Ajim, and today I want us to chat about how do you meet investors. I think we get caught up a lot into identifying all the kinds of investors out there, angel investors, incubators, VCs, but how do you actually meet them? How do you first identify a good investor for your startup, and then how do you go about finding them and actually getting on a meeting? And then in your first meeting, what should a meeting look like? And then how to follow up with the investors. Here are some of the questions that we are going to answer in today's episode. So the first question is, how do you identify a good investor for your startup? I like to use cases. I just think it's best when I give you a very specific example. The first thing that I want you to understand is that different investors have different cases. We've mentioned of like the Bible of VCs, and in that Bible we say very specifically what kind of investments we make. Typically, this is also like on our website. This is on our profiles. You see a lot of investors say, we invest in pre-seed fintech companies based out of New York. That's a very specific target. And if you are a health tech company based out of Lagos, Nigeria, and you're pitching that investor, you're pretty much wasting your time. In fact, you might even be raising a Series A round, right? Like, this investor has clearly stated what kind of investment they are doing, and you're wasting your time looking at their portfolio, trying to figure out similarities and reaching out to them. Don't do that. I think when you think about fundraising, the first thing that you have to do, very similar to the sales cycle, when you're thinking about your customer acquisition plan, you also need to think about your investor acquisition plan. First, say, I'm raising a pre-seed round. So you only want to reach out to pre-seed investors or angel investors or incubators or accelerator programs that typically invest at the earliest stage possible. The next thing that you want to consider, given that we are very focused in the African context, you want to make sure that these are actually investors that are out there looking for African opportunities. There's a catch here though, and I'll mention it later. These are companies like, typically, like if you're targeting, for example, a US investor that has never ever invested in Africa, there's an angle that I like to use. I'll typically go to them and look at their portfolio companies. You guys already know the kind of companies that I look at. Proven business models. So maybe this investor has invested in the competitor in the US. So pretty much like this very similar business model or company that you are trying to build on the continent. So if a company invested, for example, and this is like a very dumb example, let's say they invested in Stripe and you are Paystack, you probably go to like all of the Stripe investors and say, I know, and I love doing them, like, congratulations on your success. I've realized that you've invested in Stripe. Stripe is doing such an amazing job. And this is a very dumb example, but you guys get the drill. I see that Stripe is doing so well. Maybe they've IPO'd, or like maybe they recently went through like an M&A. And you say, if Stripe have been able to be successful in the US, have you ever considered investing in similar business models in emerging markets? I believe, given our traction, XYZ, our market, we are the next Stripe for Africa. Will you be interested in learning more? I know that you only invest in US companies, but if you were ever to look into emerging markets, I think there might be an opportunity here. If it's a company that have actually invested in African tech companies and they're exactly at the stage that you're in, they're exactly what you're looking for, you can just go straight into business and you don't have to go around the bush. But I would say, like, the first thing that you want to make sure is that these are pre-seed investors. The next thing you want to make sure is that they actually invest in African companies. Now, you know the trick if they don't invest in African companies. The next thing that you want to make sure is that they actually match your criteria. So if a company says that, or a VC fund says that they're only a fintech fund, which means they only invest in fintech, and you're a logistics or mobility company, and you're pitching them with the hopes that they will change their mind, they will not, and you will just be wasting your time. So make sure that you're only paying attention to generalist funds. So it means that they invest across multiple sectors, or they are a logistics and mobility fund, and they will invest in your company if it is the right fit. Another trick for this, typically if an investor has invested, let's say maybe not a similar company that in such a way that it's a competitor, but a company that maybe is in the similar industry as you are building. This typically goes for like generalist funds. So like, let's say you're a logistics and mobility company, and this company has invested in another logistics and mobility company, maybe even in another market. You can go to them and say, congratulations on XYZ portfolio company. They're doing amazing. Find something relevant about that portfolio company that maybe might be an interesting reason why they should look or pay attention to your company, and then actually reach out to them. I always say that if an investor says pitch us on our website, always apply on that form, because the chances of them actually reviewing your applications are very high. And you can obviously always go above and beyond just the application. Maybe if they're organizing an event, you want to attend that event so you can meet them in person. If they have an associate or someone that is of lower power within the organization, you might want to reach out to those people and then see if they might be willing to take a meeting with you. The chances of that happening is typically low, but it's worth trying if you really think that investor will be an amazing fit for what you're building. So when you pass all of the different criteria on like why this investor is going to be an amazing investor for your startup, I highly recommend you build a CRM. Very similar to like the way you build a CRM for the sales cycle of your clients, you want to have a CRM for your fundraising cycle. And every single time you have a point of contact with that particular investor, make sure you put that in the CRM and you actually move them through different pipelines from like, we've reached out to them, we've had a first meeting, we're currently in due diligence, they've signed a term sheet, they finally invested, or like they ghosted me, or like, you know, it was a no for now, but then I'll add them to my monthly investor update. You want to make sure that you keep track of all of these different points of contact into your CRM. All right. So now that you have identified a good investor for your startup, the next thing is like how to meet the startup investor. I did mention it a little bit earlier. It's like, if they're very active on social media, be an avid commenter or an avid liker or like something to make sure that maybe this investor can pay attention to what you're doing. If you run a podcast, for example, you can even invite that investor on your podcast. Also, don't do the dumb thing where like the investor is actually your first guest. Like nobody is going to like listen to you. You want to make sure that you actually build a good listening. Like you have, 50 episodes, 70 episodes, and actually build the traction before inviting those investors. You can just wake up and expect the investor to be your first podcast guest on the show. Again, do something else like outside of like cold emailing them if you really believe that this is the right fit investor. In fact, maybe even make a post on social media that I really want to meet, Eunice Ajim. Maybe I shouldn't use my example because somebody else will go and do this for me and I'll have no choice but to take the meeting. Like, put it out there. Like, really want to meet XYZ investor. And if you have a good audience or a good following, who knows, your post might go viral and like somebody will push that investor to eventually meet with you. Like, you have to be creative. You have to think outside of the box. Fundraising is a hustle right now. Another way that I highly recommend, which is probably the best way, if you know any founders that investor has invested in the past. So let's say portfolio companies and you're really good friends with the founder. I will gauge the interest of that friend and say, hey, I know Eunice invested in your company. Will you be okay sending an introduction to Eunice on my behalf about what we're building? And I think if you're building something amazing, that friend will be very comfortable making that introduction. Again, it doesn't guarantee anything, but at least it gets you past the typical form of just like sending an application on that investor's website. A lot of us respect the opinion of our founders very much, and all my founders on my portfolio companies, they know that they don't just send me some bullshit deals. Like, they know that like if they're sending me something, they actually have confidence into that particular founder. So that's a great way of getting on top of the line when you're looking to get or to meet a VC. Another one is really just using your network of investors. If you've already raised a little bit of money, go back to your investors and say, I'm looking to get introductions from XYZ investors. Not all your investors might know everybody, but there will always be like 1 or 2 or 3 other investors that will be willing to like give you referrals into meeting or even like making those introductions for you. Okay, so those are some of the best ways I know of to be able to like get a meeting with a startup investor. First, you have to identify that this is the perfect investor for your company. Next, you have to use different strategies outside of the box to be able to like get a meeting with that investor. And then the first meeting is so crucial. I think many founders get to the first meeting, but they never get past that first meeting. And I think it's because they show up to that meeting and they are not prepared. It is just like a horrible, I was about to curse, you know what I mean? Like shit show. And you're like, what is going on? I think as a founder, you know your baby better than anybody. I think I'm a big believer of when you show up to that first meeting, you're not trying to like get the investor to understand all the functionalities and like all the features and all the crazy technical stuff that is behind the software. Get to the second meeting before getting there. For me, I'm all about it, and every investor has a different opinion about this. When an investor said, yes, I want to meet you, and they give you 30 minutes, that's about all you get. I always advise that when you show up to that meeting, because this is what I do too. Like, I've never done a meeting with a founder without introducing myself, sharing a little bit. I always take 2 to 3 minutes and I give a rough overview of my story and why I do Ajim Capital. And I expect that founder to do the same. And a lot of the times you will be surprised how many founders don't even have a good story behind why they are building what they are building. I would say craft a good 2 to 3 minute elevator pitch that has to do with your background, your story, your why, and why you think this company is going to be successful. Don't just show up to a meeting, pull out your pitch deck, get behind the screen, and then walk me through the deck. I will never have another meeting with you again. That's just unfortunate. Because I'm like, I don't know you. I've never met you. We are not even acquainted. I'm about to be married to you for 10 years. And as soon as we meet, you're showing me your deck. Like, I saw your deck before I got on this meeting with you. I want to get to know you. So really take a moment, because that first meeting is so crucial. I would say take a time, really take a step back and put a compelling story together on why you're doing what you're doing. When you get past that first 5 to 10 minutes where the investors share a little bit about themselves and then you share a little bit about your story, I like to say, get into like a conversation of like, here's my product, without pulling out your deck, right? Oh, I actually skip a part. Show up to the meeting and say, hi, how are you? How was your day? Where are you based? I know you're based in Austin. Is that where you're at right now? Like, do a little bit of chit chat, right? Like 30 to 60 seconds into the meeting. And then say, hey, I don't know how you want to do this. I can go first or you can go first. But I would love to just see a little bit about your background and like what you're doing at Ajim Capital. And then I'll follow up by telling you a little bit about myself and why I'm so passionate about what we are building at XYZ. And then when you get past that phase, the next thing that you want to do is just say, here's the problem, here's the solution, here's how much traction we have. Figure out a way to get this information 5 to 10 minutes max. Because remember, we're already 20 minutes into this meeting. And then the remaining 10 minutes, make sure that the investor is asking as many questions as possible. Because the reason why they gave you that meeting is not because of your pretty face and your nice deck. It's because they want clarity into who you are and a little bit more information on your deck that maybe they can get past the actual deck. They want to hear it from your mouth and from your voice. So always keep in mind that that 10 to 15 minutes is super crucial, and go into a Q&A. And if they want more information, I think like a lot of founders, by the end of that conversation, a lot of founders are like, so what is your typical check size? And then I'll tell them. And then I'm like, oh, does this look like an interesting investment opportunity? And I'm like, bro, I just met you. I don't know. Like, why would I tell you that? I think the better way to approach this is like, this was an amazing conversation. Thank you so much for your time today. And make sure you're respectful of the time and say, we would love to show you a demo, right? I would love to like bring my co-founder on the next call, my CTO or my CMO or my COO, whoever that might be, get you on the call, show you a little bit demo of the call. Like, nobody will say no to that unless like they're actually like, nah, this is not for me, I'm not interested. But don't ask them for money in that first meeting. Any founder, any investor will tell you like, no, I don't know, I'm not ready, I don't, like they will like give you like some rubbish answer just because you're putting them on the spot when they had just met you. Just acknowledge what just went through, share your excitement for why you're so interested in having them as an investor on your cap table, and tell them like, hey, for next step, I think it would be best we schedule like an actual demo, and I can show you and walk you through the product. I can even share you some of like our customers that we're really excited about. You know what I mean? Like, it has to be a nice flow, and I can tell, okay, yeah, I would actually love that. Next week on Thursday at 9 a.m. I'm available. Let's go ahead and book a meeting. I'll also bring one of my partners, so like one of my employees. Let's see a little bit more about what your company is doing. That's the right way. That's the first meeting. After that first meeting, I think follow-up is super crucial, because that meeting can end in certain ways. I'll say the first one, you're very brutal about whether they want to invest, and they just push you and they say no, and they never meet you again. If that happens, I'll say good follow-up. Thank you for your time today. I really enjoyed our chat, probably like a couple of hours, or at least at most 24 hours after the meeting. Thank you so much for speaking with me today. If they say no, it's like, I fully understand that we might be a little bit too early for you guys. I would love to add you to our monthly updates. But just as a refresher, here's a little bit more about XYZ. Here's our deck. Here's our data room, just in case you change your mind and you just want to check us out. Check us out. Oh my God, I'm so tired. Just in case you want to check us out. And then make sure that you add them on that investor update. If the output is, yes, let's have a follow-up meeting, again, send them a follow-up email thanking them, send them a calendar invite for the next meeting, and just being a great human being. It's a relationship business. Like, try not to be pushy, actually show up to that next meeting and ask them, what are your next steps? What are your processes? Like, what is the typical average time it takes you for you to make an investment decision? But don't go and tell the investor, is this a good investment? Are you going to invest or not? No. Actually, it's even giving me a headache thinking about it. All right. I think I gave you guys enough information on how to identify the best investor for your startup, how to meet those startup investors, how to how to interact on those first meetings, and how to follow up. Irregardless of whether this is like a no or a yes, I always think it's always good to add investors to your monthly or your quarterly updates, because guess what? You might be too early for them today, but tomorrow is another day, and you always have to raise subsequent rounds of funding. So like, don't take a maybe or like a no for like an actual no. Just add them, being polite, keep moving forward. Okay, until next time, I hope you are living the best version of your African dream. Have a blessed day.